been an amazing.
Good evening. This episode of the Intraday Price Action Recap is being brought to you by the Smart Money Manuscript. Hello, my name is Timothy Leroy Sr., and I'm the creator of the Smart Money Manuscript. But Tim, what is the Smart Money Manuscript? The Smart Money Manuscript is your roadmap to financial freedom. That's right, your roadmap to financial freedom. Inside, we're going to be discussing things for absolute beginners who never even heard of the stock market or don't know what the stock market is. We're going to teach what is the stock market, what is a stock, what is an index. We're going to teach all of that. We're going to talk about options. We're going to talk about futures. We're going to talk about fundamental analysis, technical analysis. Speaking of technical analysis, we're going to take a deep dive into the ICT concepts. We're going to discuss how to figure out how much you need as an individual to save for your personal retirement. We're going to talk about retirement portfolios. So if you want to be a long-term buy and hold investor, if you want to be a swing trader, if you want to be a day trader, if you want to trade stocks, if you want to trade options, if you want to trade futures, the Smart Money Manuscript is for you. It's dropping on August 6, 2025, which is my birthday and my youngest son's birthday, for $69.99. Yes, $69.99 for all of this here. Mark the date, set it on your calendar, remember it, and I'll see you on August the 6th. Good evening, everybody. Hopefully everybody doing good. I don't know why my camera wasn't on, but hopefully everybody doing good. Y'all come on in here. Y'all come on up in here. Uh-oh. Knocking stuff over. Me and tu madre went to see Fantastic Four today. Uh-oh. Nah, I don't want to do that. I done clicked the wrong thing. All right. One thing I don't like about Zoom, when I share my screen, like the thing that got multiple people faces on it, it's a different Zoom window than when I'm not sharing my screen. So it's like when I'm looking at everybody, if I share my screen, then all of a sudden the one where I can see everybody is a total different screen. But in the controls don't be on, man. Anyway, it be getting on my nerve. Anyway, man, how y'all doing, man? Y'all ain't come here to hear me complain about y'all see I got my phone posted up in this right here. I got my phone posted up in this. Let me see if if you on there, anybody on IG, if you on IG, go ahead and pull up to YouTube. youtube.com/the new TLR, so you can see the screen good and you can join via Zoom. It's a link in the description. Now, that's from my last time. I'm gonna look over there at IG. Good evening, good evening, good evening, everybody. If this is your first time tuning in to Tim's Tidbits, please allow me, with everything in my being, to say welcome. If it's not your first time tuning in to Tim's Tidbits, I still want to say welcome. But I want to give you a nice hearty, well, thank you for always tuning in to Tim's Tidbits. If you don't know who I am, my name is Timothy Lee Rogers Sr., aka Aranya Grande. That's just Big Spider if you don't hablo español. I know it sounds aggressive, but that's just Big Spider if you don't hablo español. Now, as you saw in the promo at the beginning, that this episode of the Price Action Recap is being brought to you by the Smart Money Manuscript. Well, Tim, what is the Smart Money Manuscript? The Smart Money Manuscript is a course, if you will, that I have put together. I'm still putting together, by the way. August the 6th is coming very fast. And it's going to be a one-stop shop for everything that I have ever discussed on my channel. And it's going to be in nice bite-sized chunks over each topic that I've ever discussed over the span of having this channel. Now, it's going to give good information that you can go out and apply. But like anything, once you learn it, you have to study it. You have to make it become like second nature. It's got to be second nature to you, especially when it comes to the stock market. There's no way that anybody can make one course that you take and then you're just going to be ready to be Warren Buffett, right? But it's a one-stop shop for everything that we've ever talked about, and it includes like quick matter of fact, let me give y'all a little sneak peek. Let me give y'all a sneak peek. While I'm getting the sneak peek together, who up in here? Who we got in here? I see we got Jim up in here. I see Deborah up in here. That's not light-skinned Deborah. That's Deborah up in here. And I don't know where y'all went. I told y'all when I click on certain things, it brings up a different Zoom window. I see Lump up in here. I see Sonia up in here. I see Seawalk up in here. I see Empire Trading's up in here. I see Thomas up in here. Thomas, that same background, that same picture you got there, I was going to use that picture on one of my virtual backgrounds one time, but I didn't like how the chair was sitting right in the middle of the room, and I'm already sitting in a chair, so I always get one where it's a chair off to the side. We got Here to Learn and Share over there on the tube. We got, wait a minute, Thomas, how you in both places? Make up your mind, Thomas, where you going to be? You going to be here, or you going to be on the tube? We got Valentine over there on the tube. We got Kim over there on the tube. We got Felicia over there on the tube. I see more numbers than I see names on the tube, but I'm all the names that I see. So we got Jerome over there on the tube. Now, everybody that's on the tube. I'm gonna say it like this: anybody that's not True Blue Gang, right? Now today, I probably won't be doing no class participation today because we went kind of hard in the paint on the class participation yesterday, right? If you was privy to the class participation yesterday, right? Y'all drop something in the chat and let me know what y'all thought about the class participation, right? It ain't got to be a dissertation, but just drop something in the chat and let me know how you felt about the class participation. And if you're in the Zoom, feel free to unmute and let me know how you felt about the class participation yesterday. Now, let me go ahead and get I'm gonna get the sneak peek together, and then we're gonna go ahead and get into the price action recap. Now, while I'm getting the sneak peek together, if price did anything today that caught you off guard, right? If price did anything today that caught you off guard, then I want to know. I want to know if price did anything today that caught you off guard. Right? I want to know. And the way you can let me know that is you can click on the Zoom link. Very thorough, ready for part two. Appreciate that. You mean part 52? Hilary Shell, she said she is very thorough. She ready for part two. Part 52. Deborah put some fire emojis in the chat. I appreciate that. Right. Now, let me share my screen real quick. And then this right here is, let me use I got so much stuff going on my desk. I can't even reach around. You know what? IG, this phone is in my way, so I'm going to end this IG live. But if you want to hang out with us on YouTube, go to youtube.com/the-new-TLR. You can see the screen. You can click on Zoom and pull up and hang out with us. But this phone is in my way, so I'm going to end this IG live and move this phone out my way. And now, no need to share that. Delete video. Yes, discard. All right. Now, let me move my phone out the way. Let me move my cup out the way. It's my cup right here that be sitting there with my pens and what's the name there? Now, I'm not sharing my screen. You left because of time, but you had more in the tank. Did I leave because of time yesterday? I don't think I left because of time. I think that was just it. I don't be trying to hog up y'all time. I'm sorry, y'all. My ADD acting up for me right now. Something caught my squirrel. Something caught my attention over there. It was like some stuff. It's some stuff over. Like I got the stuff on the stand with my glasses and some other stuff over there, and it was just not sitting right. And anyway, as y'all see over here, let me move me out of the way off the screen. Right. As y'all see over here, this is the Smart Money Manuscript. It's a course. Right. Excuse me. It's set up as an actual course. Right. It's via WAP. Launching on August the 6th. That's me and Christopher's birthday for $69.99. If you're part of the gang and you've been part of the gang prior to May 27th, 2025, you can have access to it for free. Now, like I always say, I'm not going to block my blessings. So if anybody in the gang be like, you know what, Tim, I don't want it for free. I just want to click on the link to support you. Hey, I'm not mad. The link will be there for you. You pick whichever link you want to use. There will be a link for paying and there will be a link for the free. Right. Or I may just do a code that you have to put in to make it free. I don't know. I haven't made up my mind yet how I want to do it. Right. But you'll have access to get it for free if you would like. And if you would just like to bless me, that's a nice birthday gift, right? For the $69.99. Now, what do you get for the $69.99? You get access to the course. The course is going to be via WAP. It's going to be through WAP, right? This is the course here, broke down, right? See, we got intro, right? That's just a welcome, right? It says phase 1, right? If you collapse phase 1, right? It has different things in there. You see it says budgeting quiz, banking quiz, taxes quiz, right? How to start quiz, how much is enough quiz. So it's designed, it's a self-paced course, right? But you can't just come in here and jump down here to what are options or trading options. You can't just jump down there in phase 3 and say, hey, I want to watch about options. I don't want to watch this other stuff. You have to. because if you don't complete this module, you can't go to that module. If you don't complete this module, you can't go to the quiz. If you don't complete that quiz, you can't go to banking. If you have to complete each step to go to the next step. So it's self-paced. I don't want to do it like at a drip. Like drip is when I set it and say, from the date you purchase it, release this module on that date. Release this module on that date. Really, I don't want to do it like that. I don't want to do it like that. Right? I could go in and be like, hey, from the day you purchase it, release one module every week, right? Or release one module every 2 weeks. Or I can go in and set it like that, but I don't want to do it like that. I just, I don't want to make you go at the pace I want you to go at. I advise you to go through it. You know what I'm saying? Don't just binge watch it. Don't just Netflix it. When you go through it, right? No matter how simple it is, make sure you try to internalize the information, right? Make sure you try to internalize the information. Okay. Let's go in here and let me see here. All right. Let's go here and we're this right here where it says taxes, right? Now we ain't gonna go to taxes. Let's go to let's just go to budgeting, right? Right. See here, budgeting. Okay, you got budgeting, and let me share my sound. Let me share. I'm not sharing the sound. Right. If you go to budgeting, right, and you click the little play button there. Hello, everyone. In today's lecture, we're going to be discussing budgeting. Now, for those that's wondering, no, I am not a licensed financial advisor. So disclaimer, disclaimer, disclaimer. Now that that's out of the way, let's get into today's lecture. A quick overview of today's presentation. We're going to look at understanding the importance of budgeting and financial planning. We're going to look at recognizing some common misconceptions about budgeting. We're going to talk about steps involved in building a practical budget. We're going to look at strategies for managing debt and building savings. And we're also going to cover some tips on investing wisely and planning for the future.
Also
now, Tim, what is a budget? Well, I'm glad you asked that question, little Timmy Rogers. A budget is an estimation of revenue and expenses over a specified period.
We go
aside from earmarking resources, a budget can also aid in setting goals and measuring outcomes when it comes to making large purchases without going into debt trying to do so. Not only that, a budget can help as well with planning for contingencies in the case of unforeseen events.
Got 3 minutes?
Now, who needs a budget?
I know where to do it.
To be frank, everyone needs a budget. Speaking of everyone needing a budget, let's cover some common misconceptions or myths when it comes to budget.
Can't hear that, right?
I know you may have had that feeling of, I don't need a budget, or you might hear, I'm good with math, so I don't need a budget, or I don't want to deprive myself, so I'm not putting myself on a budget.
Well, can you hear that?
Or I don't need to buy anything big, so what I need a budget for? All of these are myths.
What, Tim?
Needs a budget. Now, let's talk about building a budget. When it comes to building a budget, you want to think about it simply. You want to think of it as a budget is just all money coming in versus all money going out. So you want to list all sources of income. Anywhere you're getting money from, you want to list that as income. And you want to list all expenses. Any money that's going out, you want to list that as expenses. And where do you want to be? Now, when it comes to budgets, you can have a balanced budget, you can have a surplus budget, or you can have a deficit budget. I know surplus sounds good because surplus means you got a little bit of money left at the end of the month. But balance is where you want to be, because a dollar that's not moving is a dollar that's losing. And you don't want to have a large surplus that's just sitting around doing nothing. And you definitely don't want to be in a deficit, because a deficit means you got a little bit too much money left at the end of your money. So balance is where you want to be. So what's next? You want to try to reduce or eliminate, if possible, all debt. You want to make sure your hard-earned money is being put to its highest and best purpose. You want to build an emergency fund, set aside as much as you can for unforeseen events. And then you want to downsize. Don't deprive. It's not about spending as little as possible or making yourself feel guilty about every purchase. It's about tracking your income versus your outcome and putting your hard-earned money to the best use. And then you want to start investing. That's when you take that large surplus or small surplus, if you had, and put it in a vehicle that's going to continue to grow your money. You want to start to invest as soon as possible. That brings us to the end of this lecture. I'll see you in the next one. All right. And then once you go through budgeting, right, you come here to the budgeting quiz. All right. Question number one. What is a budget? Y'all can wait a minute. Y'all can see the answers. Wait, Jesus Christ. Y'all can see the answers. I'm on. Wait a minute. Y'all hold on. Y'all can see the answers. I need to get it to where y'all can't see the answers. They done change. They always changing their site. I don't want the. I don't want the back end. I want to see. I don't want to see the back end. I want to see. I don't want to see the back end. I want to see the actual thing. Yeah, hold on. They done changed it up on me. Your wops. Oh my god. It's automatically taking me to the edit. I don't want to go to the edit. I want to go to the actual. Yeah, hold on. Because they done. This is ticking me off. They change this site every single day. I guess they call themselves making it better. But if you're gonna change it, let me know what you're changing. Stop, you know what I'm saying? Because now before it had the view and the edit. And now when I click on it, it automatically goes to the edit and I can't even get to the view. Dashboard, uh, products. Okay, products. That's taking me back to the same place. All right, let me try this. Let me see what happened if I copy this link. Let me see what happened if I copy that link. Oh, that's taking me to the same thing. Oh my God. Y'all know I'm totally pissed off right now. Gang gang. If y'all know me, y'all know I'm totally pissed off right now. Oh my God. 38 hot. 38 hot right now. Users. No, I don't want that. Oh my God. Let's see. Control center, archive, delete. That's taking me. You know, if I do that, that's trying to make me. Oh my God. Let it delete module. Welcome. It used to be right there at the top. It used to be like edit or drip feeding. Oh my God. Anyway, because y'all remember we went through and did some sample quizzes and everything. And now I can't even get back. I can't even go through and take it. It's not even letting me go through and take it like I did before. Like I can't even, it's automatically got me in configure mode. It's not even letting me get out of configure mode. Copy installation link. No. Time spent. No. Anyway, man. Ticked off now. I don't feel like I don't feel like looking at price right now. Cause this is the second time I got pissed off by something today. I'm on the phone with these people about my son freaking Roth account and his UTMA account, and they give me the run around and totally pissed me off before me and my mom supposed to be going to the movies. Got me all in a bad mood, and then now I come back trying to do a doggone sneak peek of the course, and now they want to let me do the test without actually being on the back end. I don't want to be on the back end. Idiots. Uh, content, delete video. There's no, even if I shrink it down, there's nothing that's like hidden that I can't see on the screen. The thing just gone. App settings, expiration. No. Anyway, man, y'all get the picture, man. Y'all get the picture. I'm mad now. It ain't no fun. Do the example with the answers, cause y'all can see the answers. What's the point of me asking y'all the questions where you can see the answer right there on the screen? Thought you need some thicker glasses. You can't. Thought you could see it. It's all right. Greatness is always tested ahead of time. I appreciate that. I appreciate that. Let me share my screen and get into the price action. Um, Shout out to everybody that's in the diamond group inside the diamond tier inside the Discord, and then the mentee tier on YouTube. I've been sharing my thoughts as I'm watching price. I ain't gonna hold y'all, and I'm going full screen for this right here. I ain't gonna hold y'all. It's a lot of freaking work trying to record in real time what I'm looking at and like focus on what I'm trying to do. I know it sounds like it might not be a lot, but when I'm sitting here watching price, and then I'll be like, oh, I need to record this. And I open up, try to be like, okay, this is what I'm looking for. A lot of times, stuff that I'm looking for is right in the moment. So it's like, now I got to stop and record this and say what I'm looking for and all of that right there. And then when I think about it, sometimes I analyze and I think about it and I'll be like, God dog, and I ain't record this. And then when I record it, then once I record it, I got to edit it and post it. And true, it don't take a lot to edit and post it because it's just quick little clips. It ain't nothing fancy, but it'd be a lot. It'd be a lot. So I'm gonna try to keep the train going. Um, that's why I was asking, do y'all find value in it? You know what I'm saying? Because if you find value in it, I'm gonna try to keep the train going. But if it's like information overload, hey, that'll be something I can take off the plate. Right. Especially since ain't nobody asked for it. It's just something I'm like, hey, let me do this right here. Right. Let me do this right here. Because a lot of times when we're just tape reading, right? That's all we're doing. We just tape reading. We're not looking at it from the aspect of I'm actually trying to take a trade. And so the thoughts that I be sharing are based off of I'm actually trying to take a trade off of this. And so with that, I don't see anybody saying that price did something to catch them off guard today. Um, I don't see anything in the chat as far as questions. I don't even see the Zoom chat anymore. I don't know where that went. Oh, there it is. Yeah, I don't see anything as far as questions. So we're going to go ahead and get to it. All right. Turn your attention to the screen, please. And we are looking at the NASDAQ on a 15-minute chart. This is Monday and Tuesday's trading, right? This is the entire week, right? This is the entire, get out of the way, Zoom. This is the, that still trips me out that when I put anything with Zoom up on the screen, I can't, it's like I'm blocked. I can't see anything, right? Make sure I'm in focus. I can't see anything because it's blocking me, but y'all just still see my screen. I have a question on yesterday price section where you get a chance. Ask. Unmute and ask, Thomas.
Yeah, I don't know what happened in the morning on the NQ
Mm-hmm.
with the we got 2 weeks. I'm not even sure what was going on. There wasn't any news or anything, but we got those 2 weeks. If you look at a 5 minute time frame at 9:45 and on that 10:20,
You
I didn't
said
have my
you said
I got it to
yesterday
look
at
like that
you said
at
yesterday at what time?
9:45.
9:45. Okay, discounted here. All right. So
I got a 10:20 wick.
about discounted right here, and then discounted right here. All right.
Yes,
You saying like so? All right, those wicks just they just seem abnormal to you.
right. I don't know. It just seemed like they were just wicking, and I didn't know. It's like a news candle, but it wasn't any news that time. That
Right.
time period.
Yeah. So all right, when you let's break it down like this right here. Right. So we're gonna look at let's chop all this off. All right. I'm gonna chop this off up into here. Up into we're just gonna go to lunch. Right. 12. Right. So we're chopping off everything and we're looking at yesterday's price action. Right. Okay. So looking at yesterday's price action. Right. Price went up. Right. And then price came down there. Right. So you see here, we started out kind of hanging out, and then we started to grind up, hung out here, went up, and we broke down and came down, right? Whenever we have a large move like this right here, be it a day, be it a week, be it a session, be it in any time you got a large move, right? What do we anticipate after that large move?
Consolidation.
Yeah, it can be consolidation for a short period of time, a long period of time, right? We anticipate some type of consolidation or cooling off, right? Why? Because the algorithm has made a huge move and it has engaged liquidity, right? So now what do we do, right? What happens when we engage a low or a high at a level that the algorithm has deemed an anticipatory reactionary point? What happens when we get to a lower high that the algorithm has deemed a place where this is a place where I'm going, this is a place where this is a terminus for a certain time period, if you will? What happens below lows and highs, right? What happens there? Hmm? What does price do once it gets there? What do we do below lows and above highs? What happens below lows and above highs? Remember, yesterday I said everything about the market revolves around this. So when we get below lows and above highs, what happens below lows and above highs, dealing with everything that the market that everything around the market revolves around this one concept. What happens there?
I don't know. It look like they generate liquidity on those where the liquidity pools be at.
Okay. What do we say everything revolves around yesterday?
Time and price, or
Oh my God.
okay, the market make it model. The
The,
market
the market
say that
maker
word for
model,
me.
the market maker
Market maker
model is
models.
is built on what?
Oh, the three. Say it for me.
Very good, here to learn and share. Somebody
Power of three. That's what it
the
is,
power of
right?
three, and
Yeah,
the power of three is the noun. So what is the
right.
power of three built
Accumulation,
on?
manipulation, and distribution.
So what happens below lows and above highs?
Accumulation,
Oh my God.
distribution, distribution.
Distribution, right? Distribution. So the market, once it comes to a place where it's deemed okay, this is where I'm going, right? So it takes this is a large move, right? Now, and the reason why I'm saying that is because you don't want to get into the habit of saying, oh, it's a large move, so we're gonna consolidate. No, right? It's a large move that has completed something that the algorithm needed to complete. Now we can anticipate consolidation, because what do we do during consolidation? Come on. What Thomas went? Thomas disappeared on me now. Wait,
Sit
what do
in your
we?
hands.
Okay. Not no, not us as people. Yeah, we sit on our hand, but we're sitting on our hand because what is it doing during this consolidation? What is it doing here?
Accumulating
Yep.
uh,
And while it's
liquidity.
accumulating, yes, we're engineering liquidity here. Okay. And so if we're engineering liquidity, we're going to be consolidating, right? And if we're inside of a consolidation, right? A consolidation on any time frame, the time frames below it are in what type of condition? What kind of condition that the time frame below this time frame we're on now, including this time frame, but especially below this time frame, what type of conditions are we in right here? Hmm? Hmm? Okay, I put it like this right here. What type of condition is this? And what type? Oh, let me get that off the screen. What type of condition is this? And what type of condition is that? Very good, Kim. Very good. High resistance, right? So when we expand a large move and it does something that the algorithm is trying to complete, and we're anticipating it to move into a high resistance condition, right? Now that we're in this high resistance condition, okay, what are signatures of high resistance conditions? Tom, give me the signatures of high resistance conditions. Two things.
High resistance conditions. Overlapping candles and long wicks.
Overlapping candles, that one. And what's the other one?
Long wicks.
If it was the other one, I would have said yeah.
Oh, I thought you didn't hear me. So
overlapping candles.
Deep retrace. What?
Yes.
Yeah, deep retracements and overlapping candles.
Overlapping candles and deep retracements. Right. So when we come into an area of consolidation, right? Right. We know we're in a condition of high resistance at this time. So if the characteristics of a high resistance condition is a bunch of overlapping candles and deep retracements, right? When we see, right, you see, like looking at this right here, you say, oh, look at that big old wick. What created that wick? You say, oh, look at that big old wick. What created that wick? Right? The same thing that created this wick is the same thing that created this candle, right? But we've been so conditioned when we see like a long wick, we feel like, oh, that's abnormal, right? Oh, look at that long wick, that's abnormal. No, it's not abnormal. You know why it's not abnormal? Because if this candle wouldn't have closed there, if this candle would have closed here, there would be a long wick there. At one point in time, this 5-minute candle looked just like this right here. It was a big red candle. At some point in time, it was a red candle that opened here, right? If I get me a little box tool here, right? At some point in time, right, this candle right here looked like that. Right. At some point in time, that candle looked just like that inside this 5-minute period. Right. But because price may move quickly, doesn't mean that there's something wrong. Right. We get into the habit of thinking if the market starts to move quickly, then there's something wrong. Or if the market moves quickly, then it has to be some type of news driver. Not saying that it is not, right? Not saying that it's not, but we have to understand that if we look here on this candle here, right? What do we trade up into here? What did this candle trade up into? Right, this 945 candle, what did it trade up into? Right, when we went above this high, right here, right? We went into that level of liquidity right there, and then what do we trade up into here? What is this right here?
More liquidity.
But what
you talking about the PD array?
Yes, what PD array is that?
Looks like a
what's your
Jackson
favorite
block?
Yeah.
what's your favorite PD array to say back in the day, for everything?
The I forget, man. Tell you the truth, I forget.
I heard somebody say it. Somebody said it.
It's a rejection
Was it the
block.
order
A
block?
rejection block. It's a
Rejection.
rejection
Okay.
block, right? So we right here, we trade up above the buy side liquidity and we trade into this rejection block and then just come back down, right? So all we did here was go up, right? Trade into the rejection block and then come back down. Okay. Once we did that, we traded back up, right? And closed at the high of the um, new week opening gap, right? We closed right at the high of the new week opening gap. Okay. And then once we traded at the high of the new week opening gap there on this counter here, put that there, right? We came up and we poked above. No, this one here. Right. Yeah, we came above the high, then we came here and we poked above this buy side liquidity right there, right? And then we came up again here, right? And where did we trade to this time, right? What is this right here? Hmm? Right? What is that right there? Anybody?
Rejection block.
Yes, we came back into another rejection block, right? And then every time, both times, right? Notice here, right? When we came up into the rejection block here, right? What do we do there? What did we create there? We came up to that rejection block and went back down.
To equal high.
We made relative equal highs, right? And then once we traded above that high right there, right? We traded back up again into this rejection block, and then we created relative equal highs, right? We created relative equal highs. Okay. So we're inside this high resistance area here, right? And when we're consolidating, the algorithm's job is to engineer liquidity. Job is to engineer buy side. Job is to engineer sell side. Okay. So every time we poke above a high like this right here, what are we doing? We're doing two things, right? Whenever we poke above a high, what are the two things we're doing when we poke above that high? Hmm? Anybody? Right? Whenever we poke above the high, what are the two things we're doing whenever we poke above a high?
One is taking out liquidity.
One, it's taking traders out. And what's the second thing it's doing?
Bringing traders in.
Setting a new high.
Yes, say the new high, but it's taking traders out, right? And it's putting traders in. So when you trade above a high, right, you taking out traders who got stops up here to get them out of the market, and you're tripping traders in who want to buy on the breakout, right? And what does that do? That engineers sell side liquidity, right? When you trip traders in, you're engineering sell side liquidity, right? When you take traders out, you're neutralizing the buy side liquidity, right? Because traders who, when we poke below these lows, right? Traders who wanted to trade the breakout, now their stop is above the highs, right? So when you trade below a low here, you're engineering this liquidity up there. When you trade above the high there, you're engineering this liquidity down here. So, and when you create relative equal highs, you're engineering liquidity because people are seeing this as strong resistance. So you're engineering more liquidity, engineering more liquidity. So every time you do these things, you're engineering more liquidity, right? So when the algorithm goes up here, right, and wicks down, all thing it's doing is engineering liquidity. Why? Because it went up to a high, didn't take it, so now people feel safe to put their stop there. right? Oh, that's strong resistance, right? It's just coming up, engineering liquidity. Went to the rejection block, pulled down, stops get put right there, right? And then we come back and neutralize those stops here and build more sell side, right? And then we come up, come over here, and then so here in this area here, right? We're still doing the same thing, engineering liquidity. And then when we come here to a certain time, right? Now we come here at a certain time. This is 10 o'clock right here, right? That we're coming into 10 o'clock right there, coming into a new hour, right? We're halfway through the macro, right? We're halfway through the macro. So when we come into a new hour, right? Once we come up and manipulate out this buy side here, we've taken this engineered buy side liquidity there, right? And then we turn around, right? And we rush down, coming down to the sell side that we've engineered. But what do? We come down and it stops at the order block and pulls back up. So now what are people thinking? Oh, that strong support. That low is in place. Stops get moved there, right? So that's all that is. It's we're in a high resistance area, right? And so we're getting deep retracements. See, it's like we come down, we get a deep retracement. So all this is just retracing deep inside the range because we're in high resistance, right? So you get deep retracements, but it's just engineering liquidity and fooling traders to think, oh, that's strong support, oh, that's strong resistance, just to come back and neutralize them and engineer more liquidity. Okay. I know it's that was a very long way to just talk about 2 weeks, right? But it's never just as simple as, oh, this is what it's doing. No, I like to walk it through and make sure you understand what price is doing, right? You want to understand what, because what do we need to understand, right? When it comes to this, it ain't about the PD arrays. What is it about? Hmm? Y'all say it together. I know this is
Order
ugly.
flow and price delivery.
Yes. I'm glad y'all ain't just I'm glad y'all just got more than one voice. Boy, look at him. Think my feelings might be hurt right now. The course already ain't working. The course, not the course, but they done changed the site, so I can't go through the test. Trying to give people a taste of what the course got to offer, and I can't even give them a taste of what the course got to offer. Now everybody quiet on me. Ain't nobody unmuting. Ain't nobody unmuting. They Everybody trying to play like they kids being loud and or they grandbabies talking, or everybody trying to pretend like they couldn't unmute today. Uh Now, did that help at all, Thomas? In all
It
seriousness.
did. It did. I appreciate it.
Okay. Oh, my dog sleeping. Say grandbaby sleeping. My dog sleeping. All right. So, um, yeah, we always want to see understand like what are the conditions that we in, right? And what can I anticipate to happen during these conditions? And I just add this one thing, right? Whenever we're in high resistance conditions, right? Whenever we're in high resistance conditions, we want to understand that the algorithm may trade to the extremes of the PD array matrix. So if we go look at the PD array matrix, okay. So looking at the PD array matrix, right? Right. Looking at the PD array matrix, okay. Is everybody familiar with how to interpret the PD array matrix? Is there anybody who not familiar with how to interpret the PD array matrix and how to utilize it when you're analyzing price? If you do not understand it, say yes or put a 1 in the chat. If you don't understand how to utilize the PD array matrix and how to put it to use when you're watching price action. All right, I see a 1. All I need is 1. All right, I'm like Nas. All I need is 1 mic. Okay, so this is the PD array matrix, right? What PD arrays are is premium and discount arrays. All right. So looking at the PD array matrix, you want to think of it as this area up here, this red line up there. You want to think of that as the highest high of your dealing range. This blue line down here, you want to think of that as the lowest low of your dealing range. Okay, this gray line right here, that's equilibrium of your dealing range. So if you got a dealing range here, okay, if you're in a buy program and you're inside of a bullish dealing range, you want to look for opportunities to buy in a discount of the dealing range, right? So if you're looking for opportunity to buy in a discount of the dealing range, what has to happen first? The dealing range has to get established. Okay, so how does the dealing range get established, right? You algorithm trades down and makes a low that takes out liquidity, right? Or based off of a specific time value that the algorithm refers to, and then it trades up and makes a high that takes out liquidity or the end of a specific time window that the algorithm is going to refer back to. So we trade down and sweep liquidity, right? And then we trade up and sweep liquidity. And now we have a bullish dealing range, right? So when we realize we got a bullish dealing range, where is price? Price is all the way up here, right? And where is that in this dealing range, Ms. V? Ms. V, the person who said they don't understand it, Sonya or Ms. V, they got it there. When the dealing range is created, where is price right now inside this dealing range right here?
In a premium.
In a premium, right? Price is in a premium. And so we want to buy in a discount, right? We want to buy in a discount. So if we want to buy in a discount, where is the discount? Is it above or below equilibrium?
Below. Low.
Okay, so discount is below equilibrium. So now you notice that below equilibrium, there are PD arrays, a mitigation block, a breaker block, a liquidity void, a fair value gap, a order block, a rejection block, and an old low, right? So you say, Tim, it say the same thing above it. You're right, but that's for if you are in a bearish dealing range, right? That's if you're in a bearish dealing range. So if you're in a bullish dealing range and you're looking for opportunities to buy, right? You want price to retrace back down into a discount. And as price comes back down to a discount, the way the PD array matrix is outlined, right? Michael teaches this is the order in which the algorithm will seek out his PD arrays, right? But when you study price, what you realize is this is the order that the algorithm creates these PD arrays as it's going up. So when it's coming back down to the discount, this is the order in which it's going to encounter these PD arrays, right? This is it's going to encounter it. Now, all of the PD arrays aren't going to be present every time. After you study price, you start to learn that there's a few of them that's always going to be present, right? And what's that? A low, an old low or an old high is always going to be present because it's You create a dealer range by creating a low and creating a high. So the old low is always going to be present, right? Then you may or may not have a rejection block, right? Because you need to understand what creates a rejection block, right? You may or may not have a bullish order block, right? You may or may not have a fair value gap, right? You rarely see a liquidity void, right? But they be present sometime. You may or may not have a bullish breaker. You may or may not have a bullish order block, right? These two right here, right? They're going to be at the top. Why they going to be at the top? Because to make a mitigation block, right? When price was coming up here, at some point it traded back down and didn't take out a low and then went back above that high. That created a mitigation block, right? But if it traded back down and took out a low and went back above the high, then it made a breaker, right? So when it's coming back down, it's either going to meet a mitigation block or a breaker, right? And in any low resistance liquidity run, you want it to just poke into the area and get gone, right? So that's why a lot of people see the breaker as so strong, because if it's in low resistance, it's not spending a lot of time digging way down to the order block, right? Because the order block is way down at the bottom of the price leg. So people think, oh, the breaker's super strong, so what's the best PDU rate to trade off of? No, it's just in a low resistance liquidity run, it's hitting the breaker first and it's getting back out of there, right? Why? Because the breaker or the order block is resting at the highest point when you get into a discount, right? And then a fair value gap, if you have displacement, nine times in displacement lets you know that we're ready to move. So a lot of times you're going to have a fair value gap there, right? So if it's coming back down, right, the liquidity, like you can just lump these two together, right? Because it's a gap, right? Lump these two together because one took out a low and the other one didn't, right? And then you have your order block and then your rejection block and your low. All right. So when price starts to displace away, right, what qualifies a order block as being an order block? Well, one of the signatures is having displacement where you create a fair value gap, leaving an area for a particular reason. So if the order block is there, right, 9 times out of 10, the fair value gap is going to be there unless you got an immediate rebalance. But if the order block is there, then the fair value gap typically will be there, like I say, unless you get an immediate rebalance and you don't see the fair value gap, but you see the order block. So as price comes back down, right, if there's a fair value gap there, right, and it's deeper down inside the breaker than the algorithm needs to come to, or if it's acting as a breakaway gap, price may touch that breaker and go. But if it's not acting as a breakaway gap, price can trade down past the breaker and trade into the fair value gap, right? But if you're in high resistance liquidity run conditions, price will move all the way to the extremes of the move without taking out the external liquidity. And where is the extreme? All the way down to the rejection block, right? So it'll come out, or it'll come all the way down to the order block. If a rejection block isn't present, it'll come all the way down to the order block, right? It's coming all the way to the extreme of the move, right, in either direction. So, and when you go back and look at price, right? If we go back and look at price, just come here and get out of here. What's going on with you? Crazy looking thing there. Get out of there. Well, I don't want that to be on. It'll be all right. No, I don't want it to look like that when I draw it out. I just want it to be looking like a regular box. All right. knock it out of there. Now, if we come over here and look at price, right? I'll put it on 1 minute candles because 1 minute candles give us like a bunch of examples, right? So if we come over here, right, we're gonna come over here to this bullish range here, right? We're gonna come up here to this bullish range there, right? From there to there, right? Because we came here, took out some liquidity, right? And we came up here and took out some liquidity, right? So now we got a bullish range that we're in, right? Remember that, that red line there, right? That's your high up there. It's a red line there. I make mine green, but I'm just gonna leave it red for the sake of looking like what the chart look like. Right. That blue line there, right? That's that low. Okay. Hide this other stuff. A lot going on here. All right. Okay. So when price starts to move away, right? We came down, we created an old low, right? Right. An old low. Okay. Once we traded down and created that old low, in this case here, we got in this case here, we got relative equal bodies over here, right? We got relative equal bodies there with a wick. So we'll say that we got a rejection block here, right? Because we got relative equal bodies. We've come down and taken out liquidity, right? And we got a long wick right there, right? So, right, we got a rejection block down here, right? So we got a rejection block right there. All right. And then price displaces away, right? We got a fair value gap and we trade above these 3 consecutive down close candles. So this displacement with that fair value gap, trading above that right there, that gives us a bullish order block. And then we already said we got a fair value gap, right there, right? And then when price trades above that high right there, right, and trades back down there, right, we don't take out a low. So there's a mitigation block, right? That's in price. And then when we continue up, right, when we continue up here, going past equilibrium, when we trade above this right here, right, trading above that right there, that high took out that low right there. So we have a bullish breaker coming up right here. So we got a bullish breaker over there, right? So in this right here, we got almost every last one of them except for the liquidity void in this example right here, right? In this example right here. So now when price, right, when price goes up, right, when price goes up and it makes a high, right, dilly dallies around, right, makes another high. So when it made that high, what do? We extended our dealing range up, right, because we extended it up, right? And then when price start to come back down, right, to equilibrium, right, as it's coming down to equilibrium, right, we hit a breaker, right? We hit a breaker there, right? It continues down, right? We hit a mitigation block there, right? We hit a fair value gap there. We hit a order block there, right? As we're coming down, we're hitting all of the PD arrays as we drop, right? Now, Tim, what PD array do I use? Whatever PD array you choose to be your qualifier for your entry. but you want to make sure you choose your entry based off of the narrative and not just based off the pattern of we're trading back to a bullish order block, so I'm going to buy. No, this bullish order blocks means absolutely nothing. The only time this bullish order block pattern means anything is if it fits the narrative of what price is trying to do at the time. So if we know that we are in an area of consolidating and the algorithm is just engineering liquidity, we're not trying to buy off of a bullish breaker. Why? Because the algorithm has not left this area of consolidation, right? Why? Because when we're consolidating, we're accumulating orders, right? And what do we say that the market was built off of? Accumulation, manipulation, and distribution, right? You want to let it accumulate, then you want to be able to identify when it manipulates so that you can engage on the distribution leg, right? Once it accumulates and then manipulates, now you're looking for your opportunity to buy off of a breaker, to buy off of a fair value gap, to buy off of a rejection block, to buy off of an order block inside the distribution leg, right? Do that make sense, Miss V, Sonia?
Yes, thank you.
All
Yeah.
right.
Thank you for the explanation, Tim. That was really helpful.
Yes. And I killed two birds with one stone when I said in high resistance, we can anticipate deep retracements based off the PD array matrix. That's what I meant when I said it comes all the way back down to the lowest. It doesn't have to, but in high resistance conditions, you got to anticipate price coming all the way to the extreme of the PD array matrix, right? All the way to the extreme of the PD array matrix. Why is that? Because it's engineering liquidity, right? It's going to trade back and forth inside the range, building up buy side, building up sell side, building up buy side, building up sell side. How does it engineer liquidity, right? It gives you a false sense of a double bottom. It pokes below a low. It gives you the false sense of a double top. It pokes above a high. That's engineering liquidity, because when you poke above that high, you force some buy stops. I mean, yeah, sell stops. You force some sell stops. Once you poke above that high, you're forcing sell stops down here, right? You poke below that low, you're forcing buy stops up there, right? And it don't got to be that one exactly, but I'm just saying above a high. You're forcing stops above some high somewhere, right? So you engineer liquidity by trading close to a low or close to a high because people see that as resistance or support. That's what everybody is taught, and the algorithm knows that. Or you poke below it. When you poke below it, you're forcing in breakout traders, and their stop is going to go above a high. You poke above a high, you're forcing in breakout traders, and their stop is going to go below a low. And then with high resistance, it's going to trade to the extremes of the PD array matrix. It's going to go up and then trade all the way to the extreme. It don't have to come all the way to the rejection block, right? But it can come all the way down to the order block, right? And then go back up. Or it can come all the way down to the rejection block and then go back up. Or it can come all the way down and poke below the low and then go back up, all right? Okay. Everybody tracking, everybody good. Everybody getting something out of this. Is he cooking? Is he cook? I be seeing other people live streams. They be having all kind of fire in the chat. You know what I'm saying? What the young folk be putting in the chat? I was looking at somebody live stream the other day. A dude out of Atlanta named Lawrence. I met him once. I don't know him. I met him once at an event. He was doing an event with Mark Monroe, and I met him. I was in Atlanta, and he was doing an event. So, whenever I be on IG or something, and I see him live, I'll pop in to see what he talking about. So he was on there. He was like, if I'm not gonna ask if I made you money, so don't put in the chat if I made you money. Put in the chat impact. Put it in chat, impact. If I've impacted you, if that play that I told you about impact, you put impact in the chat. You know what I'm saying? Like, but I'm just joking. I'm not here for validation. I'm not trying to grow the biggest channel, right? I figured out some years ago that the gift that God blessed me with was helping people. You know what I'm saying? And I get my reward from like the joy that I see on your face, right? I don't need thanks. I don't desire the thanks. I don't want anybody to praise me. I don't want anybody to lift me up, right? And I ask for y'all feedback because I can do what I think you want all day long. But if I don't know what you really need, how can I truly help you if I don't know what you really need? You know what I'm saying? Like if I'm not fulfilling your need, am I really helping you? Right? The Bible talk about that. You know what I'm saying? Folk come up to you hungry and you say, hey man, I'm praying for you. Go be blessed. You know what I'm saying? Jesus want to know, did you really help him? That man's stomach growling. He came to you hungry. And you said, hey, I'm praying for you, brother. Go be blessed. Did you really help him? Are you being the example that Jesus was? Before Jesus taught anybody anything, he fed them or met their need. He met their need first before he tried to teach them anything. Why? Jesus ain't dumb. He know a joker ain't gonna listen to you while he hungry. Stomach just growl. Say that again, Lord. I can't hear you over my growling stomach. And then once he fed them and taught them, they left. And then he turned to his road dog and said, what, you gonna go on? You gonna leave me too? You gonna leave me too? The real ones like, where else am I gonna go? Where else am I gonna go, Lord? Right? Jesus already knew they were gonna leave, but he fed them. And then he taught them. Why? Because he fulfilled their need. You know what I'm saying? He fulfilled their need. So if I don't know what's wrong with you, how can I fulfill your need? If I don't know what you lacking, how can I fulfill your need? I probably should have been full screen when I was talking like this right here. I'm up in the corner. Y'all can't really feel me when I'm in the corner. You know what I'm saying? I'm on a rant right now, so I'm done looking at the charts. I ain't gonna talk about price no more today. I feel like we done talked about price enough, but I'm on a rant right now, right? But I truly hope that y'all be getting stuff out of this. You know what I'm saying? And I truly hope that I'm having a impact on somebody, right? I know the real ones. I know the real ones. You know what I'm saying? I know, yeah, I'm on the ICT rant. I know the real ones, right? Even the quiet ones in the back, even the lurkers, you know what I'm saying? Even the lurkers, even the ones that be pulling up in the DM. Hey, Tim, I ain't say nothing because I ain't want to say nothing on the live stream, but I really appreciate even the DMers. You know what I'm saying? I see you. I see you. That's why I still pull up. I try to pull up every day, but that's why I try to figure out different ways to say it. I try to figure out different ways to because I think about all the little hangups that I had when I was learning this. I think about the hangups that I still have right now to this day. All right. Somebody hit me up the other day, was like, hey, Tim, man, I appreciate you for sharing the fact that you talked yourself out of a trade. I appreciate you for sharing that. You know why? Because me sitting here talking about it for some unbeknownst reason, right? People put me up on the pedestal like I still don't struggle with fear, like I still don't struggle with FOMO, like I still don't struggle with second guessing myself. They put me up here on this pedestal because I might get it right so many times but they don't understand. I do get it wrong. They don't understand. I do get pissed. I do. Sometimes I spiral. You know what I'm saying? Sometimes I want to flip my desk over. I still struggle with the same thing everybody else struggle with. You know what I'm saying? What the tambourine player say? We fall down, but we get up. No disrespect to the tambourine players. I love everybody. Anytime somebody get on TV and say they struggling with the spirit of XYZ, stop it. You just wanted to do it. Stop trying to blame it on the spirit. Pray for me, saints. I struggle with the spirit of homosexuality. Pray for me, saints. I struggle with the spirit of pornography. Pray for me. You just stop it. Ain't no spirit type in porn.com. You did that. Hey, man. Hey, I done got off track. Do anybody got, let me see how many subscribers I just lost. Cancel me. I don't care. I don't care. YouTube don't pay my bills. YouTube don't pay my bills. Discord don't pay my bills. Don't. Hey, do anybody got anything for me? Do anybody got anything for me? That's all I got. Hopefully y'all found value in tonight's stream. Right. I appreciate the people who, you know what I'm saying, ask the questions. I appreciate the people who, you know what I'm saying, honest enough say, hey, I don't know, they break this down for me, because they gave me an opportunity to share something of value. I'm pretty sure more than the people that asked the questions got something out of it, because even if it was just a good refresher, what we always say, stacks on stacks on stacks on stacks, blocks on blocks on blocks on blocks. All right. Shout out to everybody that participated in the class participation last night. I was proud. Y'all was coming through with the hard hitting answers last night. I was proud. Even though y'all couldn't hit a I was proud. Y'all was coming through with the hard hitting answers. Keep studying. Remember, order flow and price delivery. Order flow and price delivery. That's what's more important. Accumulation, manipulation, distribution. Can you identify when we're accumulating before we manipulate, right? Because we're not always just going to accumulate then manipulate. We may be accumulating just to continue. You see what I'm saying? And the manipulation is happening on a time frame lower than what you're looking at right now. And if you've already manipulated on your higher time frame, right, then you can anticipate manipulation on lower time frames, and you can possibly get a continuation, right? But Tim, what are you talking about? Anybody that, all of the members that's got access to the mine of little Timmy Rogers, right? For everybody that's got access to the mine of little Timmy Rogers, you know, I created a video today that was talking about, right, This green line right here, that's a PD array I was looking to short off of yesterday, right? That's an inversion fair value gap I was looking to short off of yesterday, right? And I said, if we, when we come back to it, I'm not just going to sell off of it because we had already reached the terminus of what I wanted to short off of this for, right? I said, I need for price to show me what it wants to do. Okay. And then if you look here, right, you see here, this is my sell side liquidity for the 930 opening range. This is my buy side liquidity for the 930 opening range. Okay. So when we let the algorithm establish a range, right? What do we want to see price do? We want to see price do what? Engage with what? That's a question. That's a question. Hello?
Can you repeat that, Tim? Can you repeat that?
When we let the algorithm establish a dealing range, we want to see it engage with what?
The opposing liquidity.
That's preferably the opposing side of the liquidity, but we just want to see it do what?
Engage one side of the range.
Engage one side of the range. And once it engages one side of the range, if it's the opposing liquidity to the draw that we're anticipating, right? We're looking at that as what? Manipulation, right? But if it engages the liquidity in the direction to where we're going, we're looking for signs of what? It starts with a C.
And it wants to continue.
Continue. We're looking for signs of continuation, right? So we're consolidating right here. Okay, follow me. We're consolidating right here. All of this is consolidation. We're consolidating. We've made the low of the range and we've engaged the sell side right here, right? So inside this consolidation here, while we're engineering liquidity, right? Price is not showing a willingness to go back to the opposite side of the range, right? But my draw is down here, right? My draw is down here at the daily low. Why? Because we've already taken out the daily high. We've gone up to a algorithmic extension and we've started to retrace back down. So now we're back inside the range. And now I'm anticipating price to go to the opposite end of the range. We talked about this. Why? Because this is a daily range and we're inside of a new week. So if it's okay for me to trade to the opposing side of the liquidity without breaking the buy program on the higher time frame, right? So when we engage the sell side liquidity, and we're not showing a willingness to go back up, now we're looking for signs of a continuation, right? So now we're consolidating and we start to expand out. I'm not looking at this as manipulation. Why? Because the higher time frame has already manipulated and now we're trading through the liquidity. And so now I'm not looking for it to run back up, because when we poked through here, I was looking for the wig snatcher. I want it poked through here and it immediately reversed. So I wanted to see it take out this high, right? But since it did not take out that high, you know what I said? Okay, it's not giving me the wig snatcher right here. So when we break down through here, then I will look for a reason to short. Now, if we look a little bit further over, it did set up the wig snatcher here. It dropped below the low and immediately went back up above the high, right? And then once it went above the high, then we dropped down. We did get a SIBI right there that I did not get to participate on, but then I did get a chance to participate on this 5-minute SIBI. I didn't get a chance to participate here because I was watching a 5-minute time frame, right? But I did get a chance to participate on this 5-minute SIBI right here, right? Why? Because it gave a continuation pattern. It didn't it didn't attack the buy side to give me a manipulation setup. It attacked the sell side. So I was looking for a continuation setup. What was I looking for inside the continuation? What should you look for in the continuation? That's up to you, right? It's up to you to decide, how do I want to engage price? When I was here, I was looking for the wig snatcher so I can engage further up here, right? It didn't give it to me there, right? So once I got this breakdown over here displacing away, now I'm back below this inversion fair value gap that I wanted to short off yesterday, right? I'm over here. We're trading back down. We're breaking down below the midnight, right? Price is collapsing. We create a SIBI as we leave this area. Now I'm looking at this area as a balanced price range because we left it. We create a 5-minute SIBI. I'm trying to short here because I don't anticipate price coming back up, right? Got a continuation pattern. And looking here, in hindsight, I can see, yeah, we did get the wig snatcher here, but we didn't get it when I was looking for it over here. And if it don't give it to me, okay, I'm not engaging. It didn't give me what I wanted, right? This little shallow run down there, I said, okay, this could be the wig snatcher. Shallow run, go back, take them out, and then displace away. It didn't give it to me. Oh, well, no harm, no foul, right? No harm, no foul. I'm not mad, right? I'm not mad. And then when you look over here, right? When you look up, see right here, this right here says 1045 right there. As we scroll up, then that lets you know that right over here in this time frame, right? This is moving into what? A macro time, right? Time and price, right? Because over here, during this macro time, it wasn't doing what I wanted to do. See right here, it says 10 a.m., right? Over here during this macro time, it didn't give it to me, right? But over here, right, going into this macro time over here, right? Time and price. Time is king. All right, man. I done ran my mouth enough. I said I wasn't even gonna get into it like this right here. But you know, once y'all got me to talking, it just came out. If I offended anybody with the things I was saying tonight, I'm so not sorry. Hey man, it's your boy, Timothy Lee Rogers Sr., aka Aranya Grande. Until the next time I decide to get on Al Gore's internet and share my thoughts with this thing that we like to call price action. Y'all be safe out here in these trading streets, man. Gone.